Good afternoon, everybody. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services. And we're back today with our weekly wrap up. Graham, there's been some volatility continuing in the market. What can you tell us about all that?
Yeah, thank you, Stacy. Thanks for everyone who's watching and listening to the call. Yeah, what a wild week last week. For instance, if you're watching what was going on, we had Facebook down 26%. On the flip side of that, we had Amazon up 15% off their earnings. So it's kind of been a market that we've talked about before. It's the haves and have-nots. The have-nots who are not having good earnings, not having good margins, aren't having good revenues, good sales. The market is not giving them any attention in a positive way. Let's put it that way. They're selling. Anything that's had the ladder of positive earnings, positive margins, sales, things look good. They're rewarding them with really good rallies in the prices. So again, this volatility, this market is continuing to try to figure out or find a bottom and where it wants to find a home, if you might. Remember we talked about in the last calls, we were talking about we want our investors or clients to focus on growth at a reasonable price, GARP, not growth at any price. That is being priced out of the market where GARP is being priced into the market. We probably see the indices, really the Dow and the S&P, not that far off their 52-week highs. 3% for the Dow, roughly about 5 or 6% for the S&P. We still see small cap Russell and the NASDAQ still pretty challenged, 15% or 10% respectively on those index from their 52-week high. So still some room to make to get back up there. Still a lot of volatility out there that we should probably just plan for.
Right. Well, do you think the negatives have been priced in, considering the geopolitical events that have been going on and the Fed's, talking about raising the interest rates? Do you think that that's something that has been priced into the market?
There's a lot of question marks about that, right? How much is the Fed going to increase rates? 3 times, 4 times, 7 times? I'm a big believer, at least a student of the markets and the economies, that, probably 3 or 4 is probably more in line with a slow, steady move, and then sit back and they will evaluate, right? I would say if the Fed comes on too strong to try to stave off this high inflation that we're in, we're at 7% inflation, and rates usually go up to kind of tamper down that inflation. I think if they come out of the gates too strong, Stacey, I think that could really hurt the market. That could really push growth out of favor even more, and that could bring more volatility on the downside. So I think it's a market all the way into March that's going to just be oscillating, with plus days and down days. I think just volatility. Geopolitical is always going to play a role. It's just a question mark. Who's going to stand their ground, right? Or is anyone going to back off? Well, I guess we'll just have to see.
All right. Well, thanks so much, Graham. I know everyone's appreciating that insight. And thanks to our viewers for joining us today. We will look forward to seeing you again next week on another weekly wrap up. Thanks so much and have a great day.
Take care.